Ladies and gentlemen, welcome back to Apex Investor. This is the daily update for Wednesday, January the 19th. So at the top of the channel, or this episode, MMATreddit is the first stock we're going to look at, and it went all the way down to 20150. This is the lowest we've seen it in quite a while. I don't believe it's been this low in about over a year, since August, actually November, make that November, December, about December of 2020. So it's been about a year and a bit. But that is what we're in right now. It's not going to change until the oil and gas assets are completely sold off, until the dividend is figured out and the oil co spin-off has been officially been made official, and then they divvy up the dividend to the respective shareholders who own the MMTLP. Okay, so that's all for MMATreddit, and volume was actually not too bad considering. Okay, we're going to do some DD actually before I get to the DD, I'm just going to read some feedback. I did post this on MMATreddit. It is my video highlighting the top 10 reasons to buy MMATreddit stock. Part 1 is glucose and diabetes, and it had some constructive criticism and mostly positive feedback. Added a little description on the bottom. I think he's talking about the description box maybe. So maybe I should put a link to the glucose website. I think that actually makes sense, and people liked it. Thank you very much. I wish there was more constructive criticism, and people said my voice is perfect for this, so thank you very much for that. I appreciate that a lot. So as I said, we're going to do some DD into two companies that I'm going to include QuantumScape as the fourth darling of this channel. Actually, it's such a really good stock. It's got incredible prospects. I kind of lump it in with MMATreddit in terms of a company that has incredible technology that can really change the world. So QuantumScape, their stock price is at $17.92. It's down 8%. And they're down another 0.5% after hours to $17.82. This is the 52-week low, ladies and gentlemen, and the 52-week high was 72. I do believe this was at 72. Okay, so 72 was the high. Back in, okay, no, it was at 114 back in December 2020. And it reached these hills, these heights of 62, and then again almost 60 in March, March of 2021. So not too long ago it was at 60, and not too long ago, just a few months ago, in November the 8th, 2021, was at $38, which is roughly double of what it's worth now. And is this justified? Volume is above the average too. I don't believe this is justified. We're going to look into this company, do some DD right now, just to see what kind of investment this is. This is coming to you from thefool.com. I don't like going to them too much, but I was reading this article and it is interesting. So it's talking about why QuantumScape stock sank in December and continues to fall. I think I need the pop filter. So what happened? The stock QuantumScape crashed 23% in December. According to data provided by S&P, shares of the EV battery startup were roaring until mid-November, when valuation and macroeconomic concerns put the brakes on the rally. It is already down another 10.9%. Okay, so what? So the passage of Joe Biden's $1.2 trillion infrastructure bill earmarked $7.5 billion on building an EV charging network of 500,000 chargers it sent all EV stocks, well, most of them, surging in November. QuantumScape shares leaped 25% in just the second week of the month. Although the company is still years away, so this is an important point, probably one of the most important takeaways or factors regarding the stock is that they are still years away from commercial production and sales. Its solid-state battery technology is touted to be superior to the lithium-ion batteries that currently power most EVs, actually I think all of them, and has kindled substantial investor interest in the stock. In early December, QuantumScape participated in the Advanced Automotive Battery Conference, after which Cohen analyst Gabe reiterated the stock's rating of outperform of the target price of $36 a share. So at that conference, QuantumScape presented new data on cells reaching more than 400 cycles without any external pressure, as reported by thefly.com. They called it a significant achievement for QuantumScape. Yet the stock hit a roadblock in December. Its rally in the previous month triggered profit-taking, even as the emergence of the Omicron variant and lockdowns exerted selling pressure on stocks across various sectors. EV stocks were hit even harder when later in the month, Senator Manchin rejected the Build Back Better plan that proposed significant spending on clean energy, including big incentives on EV investors, or on EVs. So investors were betting big on that plan to open up growth opportunities for stocks in the EV industry. So now what? QuantumScape has been quiet since mid-November, when its testing data came ahead of schedule and revealed its 10-year battery cell could run at least 800 cycles, 800 cycles at better than 1 hour charge rates. Any movement in QuantumScape stock price since, therefore, has been purely a reflection of market sentiment and has little to do with the company itself. Actually, I think you could put that across the board, even with MetaMaterials and IRNT and so on. Although QuantumScape does not expect to start commercial production before 2024, so here we got a date here, 2024 is when things are going to really ramp up for this company. It's going to head to triple digits again. This year could be an important one as the company makes headway into building its production lines and delivering prototypes to its automotive partners like Volkswagen. That said, although the EV industry is booming and QuantumScape's battery technology holds promise, the stock will likely remain volatile given its high market cap of $8.3 billion, even after their recent drop. So that's a pretty good article, I have to admit. It kind of sums up what's going on with QuantumScape. Expect them to start commercial production of their revolutionary battery technology for EVs in 2024. So between now and then, we've got 2 years before the stock explodes. So it's quite a ways to wait, but it's still a very good stock. This could be the dark ages where we see the stock sub 20, only to get to $100, maybe $200 in the next 3 to 5 years. So let's look at this another article from Fool.com. The Motley Fool is talking about 3 EV companies you can buy and hold for the next decade, saying these are the best EV stocks. I don't argue with it. I don't think they're wrong. Tesla's number 1, obviously. Lucid is probably number 2. QuantumScape, you could argue they're both number 2. Like, it's probably pretty even. So let's just read their QuantumScape section. QuantumScape says holds a lot of promise. They're working on the next generation battery technology that will help reduce the size and cost of batteries used in EVs. I just want to also mention that it's not just that they're working on it; they've proven their technology works. They have proof of concept. So that's why Volkswagen they have a confirmed deal with QuantumScape. They have exclusive rights to use their their battery. If it didn't work, no one would sign up. At the same time, the company's technology will improve battery efficiency. QuantumScape's solid-state lithium metal batteries are being developed with much higher energy density than the lithium-ion batteries used currently. I find this interesting because I've looked into lithium-ion batteries when it comes to like generators, home generators. Rather than gas-powered generators, you'll have lithium-ion type that are not non-toxic, do not produce fumes. And lithium-ion seems to be on the way out. And in its place is a new technology called lithium iron phosphate batteries. So I wonder if this is related to that at all, the lithium metal batteries. Okay. QuantumScape received $300 million in funding from Volkswagen. Volkswagen is also monitoring the company's progress in battery development. Another top 10 automaker by revenue recently entered an agreement to buy 10 megawatt hours of capacity from QuantumScape, so they didn't name who that is besides Volkswagen. The company's early progress was also validated recently by an independent lab. So yeah, they are making progress. It's going to happen for QuantumScape. QuantumScape is an early stage company that holds a lot of promise. Okay, why is that? Let me just open that up. Whether it can deliver on that promise remains to be seen. It's kind of like in the same boat as MetaMaterials in a small way, although they're limited to one thing, EV batteries. However, the story so far seems to be unfolding as per the company's plans. If it succeeds, a small investment in QuantumScape could generate significant returns in a decade. And that's kind of, yeah, again, like in the same boat as MetaMaterials in a decade from now. How much more will the stock be worth? Most likely more than $2. I give you, I bet you that. Could QuantumScape be a millionaire maker stock? Okay, so this is from April 21, 2021. So QuantumScape is 73% off its high price of more than $131 in December last year. Let me just hit the highlights here. Okay, their biggest attraction is promising technology. The company claims to have achieved major breakthroughs in next-generation battery technology. Right now, electric vehicles use lithium-ion batteries, though they're a major improvement over their predecessor nickel-cadmium batteries. Lithium-ion batteries have their own limitations. To begin with, their energy density, the amount of energy produced per kilogram or per liter volume, is low. This makes them bulkier, as increasing weight beyond a level adversely affects a vehicle's performance. Electric vehicles right now have limited range and need frequent recharging. QuantumScape uses solid-state battery technology and has developed lithium metal batteries that have higher energy density. Additionally, they can be charged faster and could cost less than lithium-ion batteries. It reminds me of MetaMaterials, that it's way more efficient and cost efficient as well. So performance-wise and economic-wise. If successful, this technology could be a game changer in the EV space. The second thing that favors QuantumScape is the backing of a list of notable people. Apart from an experienced management team, the company has the likes of Bill Gates and Volkswagen as its investors. It also boasts several notable board members, including some from the auto industry. The company has spent more than a decade in researching their battery technology, and it looks committed to its purpose. Finally, QuantumScape will have a near confirmed buyer in Volkswagen, so it's already been done with. Should it start commercial production of batteries, they plan to build more than 25 million EVs by 2030, and they've committed funding of 300 million to QuantumScape. I believe that's only going to lead it's going to lead to an exclusivity contract for Volkswagen to have exclusive rights on the QuantumScape batteries for probably a period of time. I'm not sure how long, but we'll see what happens with that. This partnership does not require QuantumScape to supply exclusively to Volkswagen. Okay, so I was wrong. Correction, I was wrong. The company can potentially sell to other automakers such as Tesla and Lucid and so on. What may not work? There are several factors that may affect their plans. First and foremost, it does not have a commercially viable product right now. No, it doesn't yet. The company's battery technology has only been sample tested in labs. There remain many unknowns between now and when the company thinks it can have a product ready for use at a commercial scale. For example, QuantumScape uses a proprietary separator in its lithium metal batteries. It expects engineering challenges as it increases the dimensions and volumes of this solid-state separator. Likewise, to achieve the required energy density, single-layer cells need to be stacked in multi-layer format. The company has not yet built multi-layer cells of dimensions required for electric vehicles and does not yet have the manufacturing processes to develop such cells in high volumes. And looking back at switching to MetaMaterials now, we know that MetaMaterials has the manufacturing capabilities to deliver their products in high volumes, especially since the acquisition of Nanotech. Back on topic here, further, the company has not yet finalized the composition of cathode material to be used in its solid-state batteries and whether it meets electric vehicle requirements or not. In short, QuantumScape's solid-state technology could fail to produce the desired results, or it may end up costing higher than the company is hoping. So big question marks there. The second factor that may work against QuantumScape is fierce competition. QuantumScape is not the only company trying to commercialize solid-state technology. Toyota, for example, plans to produce vehicles running on solid-state batteries by 2025. It hopes to launch a prototype as early as this year itself, along with Panasonic. Toyota is believed to be backed by the Japanese government. Toyota already has more than 1,000 patents related to solid-state battery technology. Top suppliers of lithium-ion batteries are also researching solid-state technology. Finally, there are several development stage companies working on the next generation battery technology like EnergyX and Amprius. QuantumScape has more than 200 patents and patent applications relating to its battery technology. That does seem to be higher than most competitors, apart from Toyota. With the backing of Volkswagen and Bill Gates, QuantumScape looks well positioned to take competition head on, and that's a good point. And that's kind of like MetaMaterials, except MetaMaterials has a monopoly on MetaMaterials sector. Another potential issue is that of patent infringements. Although better protected in the US, patent rights could be difficult and expensive to protect in other countries. On the other hand, QuantumScape's competitors may hold some patents that may interfere in the production process, resulting in lawsuits on QuantumScape. That could make it difficult for QuantumScape to carry on its operations. The final thing that works against QuantumScape is the long time before it could become profitable. The company expects to generate positive EBITDA in 2027. I don't know what that means. Many things can go against it. Let's look that up. In the meantime, the biggest being a competitor bringing the technology to market before QuantumScape does. Conclusion: in addition to the above noted positives, it is also worth noting QuantumScape does not expect to need additional funding until it starts commercial production. That means less potential dilution for existing shareholders. Based on its forecasted EBITDA of $1.6 billion in 2028, the stock's valuation seems reasonable after its more than 70% fall. Can QuantumScape fail to achieve what it is hoping? Of course it can fail, but the company seems to be making an honest effort in a promising segment, and it seems to have a lead and an edge. Still, competition is fierce, and there remain many unknowns between lab testing to commercial production and real-world operation. But I think There are more pluses than minuses here. For that reason, QuantumScape has a fair chance of becoming a millionaire maker stock, and MetaMaterials is in the same boat. So let me just see what EBITDA stands for. EBITDA. What is it and what does it matter? Why does it matter? Using this metric can be a handy way to adjust for factors that can differ from one company to the next. The acronym EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It is a useful metric for understanding a business's ability to generate cash flow for its owners and for judging a company's operational performance. So I wonder what MetaMaterials EBITDA is. I wonder what all these trending stocks EBITDAs are. GameStop, AMC, Clover Health, anything that is mentioned on Wall Street Bets, IRNT, Tesla. I wonder what their EBITDA is. So again, it's an earnings metric that is capital structure neutral, meaning it does not account for the different ways a company may use debt, equity, cash, etc. Overall, it is a handy tool for normalizing a company's results so you can more easily evaluate the business. It is not a substitute for other metrics such as net income. Okay, so things that are excluded, items that are excluded are interest, taxes, non-cash expenses. How to calculate EBITDA? It's very simple to calculate it. Start with a company's annual SEC Form 10K or quarterly 10Q report filed with the US SEC. Go to the operating statement. You will find line items for all of the items in EBITDA. So earnings, net income or net loss, interest expense, sometimes also interest income, income tax expense, sometimes also a tax credit, and depreciation and amortization, typically combined but sometimes as separate line items. Next, add up all the line items that are expenses. Subtract any line items that are income, such as interest income, then add the total to the net income or net loss figure. The result is earnings before interest, taxes, depreciation, and amortization, or EBITDA. In other words, you're adding any expenses from these categories to and subtracting any gains from the company's net income. Many companies also report adjusted EBITDA. This is not the same thing as EBITDA since it includes additional expenses. Okay, so the limitations are, so it can help you understand a company's underlying operating results, but if you use it incorrectly, it can have a negative impact on your returns. It should not be used exclusively as a measure of a company's financial performance, so it is not perfect. But why would you use it? Okay, they use a lemonade stand example. Lemonade stand A, and then lemonade stand B uses debt. The other one uses equity. One with debt and one with equity. So lemonade A is the right way to do business. So EBITDA is $800. Lemonade stand B is $800. Oh, they use more debt. It is less profitable. When compared on the basis of EBITDA, the lemonade stands are equal. So that's one of the flaws. Okay, well, I don't use that metric personally, but that's interesting to know. Okay, last stock we're looking at is IRNT. This is some DD on IRNT now. One of the darlings of this channel, but quickly falling in favor, falling from grace. So I'm just going to read some comments on Yahoo Finance. Where's that comment here? It says here, there's a Carasoft collaboration. And then it says here, John M. Keane, director, executed a purchase of 25,000 shares for $106,000. Okay, these replies are not really loading. So they have large multi-year federal government contracts that are going to propel this stock in the near term. They're very difficult to land, but once you do, you're golden and you tend to stay in. IRNT is in. The government funded them, and now it's just a matter of hearing that they've begun to be deployed, which should be any time now, despite revs being deferred to 2022. These guys made great progress in landing new customers, and this will be the year they really accelerate and the stock price with it. Okay, so there's some good responses here, some good comments. IRNT has 1.6 million customers and over 300 employees. Seeking Alpha say they are undervalued below $20. Look it up. Okay. The last CC wasn't what people were expecting, but they still have contracts in place. Revenues are given, and when they announce that their government contracts have begun to be deployed, this should run up quite nicely. Yeah, so we'll see what happens with IRNT. Conference call, that's what CC stands for. Okay, so that's a little bit of a commentary there. And we're going to look at one article on IRNT. This is recent news from January the 13th. So it says IRNT and New York Power Authority, NYPA, expand partnership to defend key supply chain partners with collective defense. So NYPA demonstrates cybersecurity leadership by providing cloud-based solution to serve its municipal utilities and cooperatives, anonymized threat information to be shared at network speed to create a dynamic radar-like view of cybersecurity landscape and enhance resilience of New York's grid. This is pretty big business here. IRNT, an innovative leader transforming cybersecurity through collective defense, today announced an expanded partnership with the NYPA, the nation's largest state public power organization, to secure the state of New York's public energy ecosystem. That's a big deal. Based on IRNT's proprietary machine learning and artificial intelligence, the cloud-based cybersecurity solution will provide collective defense capabilities to NYPA and its key supply chain partners to strengthen the state's ability to protect the grid through a unified cyber defense strategy. In the same way that utilities band together to provide mutual aid after damaging weather events, NYPA is making collaborative responses to cyber attacks possible, said Bill Welch, co-CEO of IRNT. We are proud to work with NYPA to enable all public utility stakeholders to adopt a proactive defense against any cyber adversary with an eye on the grid, from criminal groups to nation states. Supported by Amazon Web Services, that's a big deal too. NYPA's adoption of IRNT's collective defense solution will enable New York municipal utilities, partners, and other relevant critical infrastructure state agencies to create a dynamic, radar-like view of the attack landscape that provides visibility into a wider and deeper range of threats across the state's entire power grid. That's only one state, that's only New York. Powered by a network detection and response (NDR) system that tracks network anomalies with behavioral analytics, NYPA's key supply chain partners can use IRNT's collective defense platform to collaborate in real time to better detect and defend against attacks. This approach further enhances the resilience of New York's grid amidst the escalating prevalence of attacks on U.S. critical infrastructure. Given the rise of sophisticated cyber attacks, we need to help our municipal utilities implement a strong security program that can detect and mitigate attacks in real time, said Victor Costanza, No relation to George, maybe. Deputy Chief Information Security Officer at the NYPA. With the technologies provided by IRNT and AWS, the IT and power infrastructures and NYPA supply chain ecosystem can collect and share anonymized cyber threats information so we can defend our enterprise networks collectively, raising the security posture of all of us throughout the state. Following the success of an initial pilot with 5 NYPA municipalities, today's announcement of the expanded partnership will enable the remaining utility companies included in the NYPA supply chain to leverage IRNet's advanced threat detection capabilities as part of the NYPA collective defense community. Defenders of the state's IT and power infrastructure will receive alerts on anomalous network behaviors correlated with other collective defense participants from the U.S. energy sector at large. In the event of a coordinated attack, the community also benefits from expert guidance from the top cybersecurity professionals of IRNet's Security Operations Center. So their collective defense platform serves as an early warning system for all, using only anonymized threat information. This innovative and scalable approach to defending the NYPA energy ecosystem offers a blueprint on how to bridge gaps between the public and private sectors to enhance the protection of U.S. critical infrastructure, as called for in the May 2021 Presidential Executive Order for improving the nation's cybersecurity. So that's all for that press release. That was quite wordy, but I think you get a bit of a sense of how serious IRNet is and how serious cybersecurity threats are too. So we look at metamaterials in this channel, and there's a lot of like laser threats and different things regarding 5G and trying to protect the aviation industry, for example, from 5G signals affecting their machinery. Then you've got IRNet protecting the New York City or New York State grid, power grid. So that's a big deal. You've got QuantumScape with their battery. Hopefully that is produced according to and works according as advertised. But these are some companies that are very promising. Metamaterials, you've got QuantumScape, you've got IRNet, and Clover Health I'm not so savvy about. I'm not sure what they do. All it has is the name of Chamath, to be honest, and a lot of hype, a lot of holders and retail investors in that stock, and possibly insiders as well, institutional investors, I should say. So thank you very much for your time. This is the daily update for you. May God bless you all, and God bless your investments.